playfulness and curiosity.
This new superpower called persuasion.
They're the rules of the world, and then here's the rules for us.
What does rich mean?
Stories and wisdom.
Welcome to the Stories and Wisdom podcast. Today we are talking with Luni Libes, entrepreneur, author, investor, CEO of Africa Eats. It's a public impact investment company focused on reducing poverty, hunger across Africa. And you're also the founder of Fledge. I think that's how I know you. For about 20 years that I've been in Seattle, you're one of the alumni at Tepper or GSA as when we went to. So welcome to the podcast, Luni.
Thanks for having me. Okay, first correction though. I'm actually not a Tepper alum. I'm a Carnegie Mellon alum
Carnegie Mellon alum. That's right.
Yeah, from the math department. But I got invited to all these Tepper events because I'm a business guy.
That's right. You are a cross-disciplinary entrepreneur. You're a Carnegie Mellon alum. That's right. But you do show up at our Tepper events, and that's how I know I've seen you. I must say, you had very unusual careers in terms of people we've had on the podcast, that you've done a lot of different, very interesting things. Smart investor, operator, teacher, educator, and a community builder even as well. So when someone asks you, what do you actually do? How do you describe yourself and what you do?
I am a self-identified entrepreneur. I'm counting companies. The latest one is number 10. Number 3, I didn't start, but they asked me to write the business plan, so I include that one. It's the only one I joined. The rest of them, I'm the founder or co-founder of 9 companies. That's not normal. That is not a normal career. And yes, I'm also an investor. I'm a professional investor, but not a fund manager. I run an investment company. So we can go into that later if you want. But I took inspiration. I basically was trying to answer the question of how does one make equity investments in Africa or anywhere in the world where there are no exits and still make money, right? And impact investments at that. But and how do you make money? So I took a bunch of lessons from Berkshire Hathaway.
So we'll start with our first segment. It's memoir moment. So let's start at the beginning, experiences that shaped how you think today. So is there an early part or moment in your career where it shifted your perspective and put you on the path that you are on currently?
Yeah, probably 4 different moments. I'll do them briefly. First one was in my undergraduate curriculum, sophomore year. I got invited to a program to teach you how to be a mathematician. And so rather than just being taught the formulas, we were taught a very intense class, intense class, on how math works. And so that was the first piece. From that, I take first principles thinking. Always go back to the beginning, go look at history, see why things are done, not just how they're done, but why are they done. Second one came 3 months into my first job after school. It's not on my LinkedIn. I leave it out. I worked at a very large company. I took some bad advice and joined the big company out of school. And 3 months in, I was done. I was ready to go start my own company. I have no idea how large companies actually get anything done. The next moment came in company number 2. That was the first one that was backed by venture capitalists. So I literally had venture capitalists knocking on my door back at my first company. I didn't need their money. We didn't take their money. But they did come and pitch us more than we pitched them. But the second company, we went and got money from venture capitalists. And that started a series of 3 companies in a row where we raised money from California VCs, often early, first checks. Strangely enough, I got first checks from 3 different funds. So I met the entrepreneurial VCs, the first gen in their crowd. I learned how that worked, learned how it didn't work. And then the last piece, I woke up one morning, I had 4 companies still selling products, which is really weird, not a common occurrence. And I knew I must know something, but I had no idea what it was. So serial entrepreneurship's rare, but serial entrepreneurship where most of them haven't failed is really rare. It wasn't so much I wanted to figure out what I knew, is that I wanted to help the next entrepreneurs follow me. And I figured, well, if I start mentoring them and helping them, I'll figure out what it is I know. And I stumbled across a business school, and it was called at the time Bainbridge Graduate Institute on Bainbridge Island in Washington. And it turned out, I was not seeking this, but it turned out that it was the first business school in the world to teach how to do good in the world with for-profit tools, with the tools of business school. And so they let me sit in the back of the classroom. They fed me meals in exchange for teaching their students, not as a teacher, but just as a mentor. And then my last my 5th software company, we merged it left town, and I didn't want to do another software company. The ideas that they were teaching at that school, the ideas had just seeped in and I had to do something useful in the world. And so that was probably the biggest changing point in my life. That was 2011, and I started Fledge in 2012 to pursue that dream.
Wow. Now, I want to go back to that start that you mentioned in terms of the math class in university. So at its core, first principles, the way you described it, did you unlearn a whole lot of things that from high school in terms of, because math is fundamental language, or is it a new set of tools on how you look at it? Can you go a little bit deeper on that one?
Let me explain it with another example. So as I said in the intro, I run an investment company, not a fund. Why do I run an investment company? Well, if you literally go back and look at how and why venture capital funds were created in the first place, that model, that business model that they're following doesn't work in Africa. It actually doesn't work in Chicago or Houston or Atlanta. It doesn't work in most of the United States. It doesn't work anywhere in Canada. It doesn't work in most of Europe. It only works in a few cities around the world in the way they do it. One of which is Silicon Valley, which is where it started, right? So it was designed. It's like, think Darwinian evolution. Well, it was designed for that ecosystem and it works there. You can't transplant it anywhere else. It's not the fittest design elsewhere. So what I learned in the math class is, well, go back and find out what the fundamental beliefs are in the system. Question, what are the assumptions in the system? So I went back and figured out how venture capital actually works and what the assumptions are, especially the unnamed assumptions. And then I could question them in the context of Africa and say, oh, okay, well, here's whatever it was, 7 assumptions. 5 of them are not true in Africa. And so given that, the end goal is an entity that looks and feels like a fund, right? It's a pool of capital that makes investments, but it just can't use the model of a venture capital uses. So what are the other options? And so just like in a mathematical proof, we know where the end goal is. We know where the starting position is. The challenge is to find the parts in between to get you from the start to the end. And you can work forward and you can work backwards. It doesn't matter. But once you've connected them, you got, oh, well, in math, we call that a proof. And in business, we call that a success.
Brilliant. And in that context, I want to bring this context of time. Do you set time as you're testing out these hypotheses and then moving forward? Or do you let it gestate and then give it time? Like, how do you put a sense of, we have to get this done by a quarter or a year that companies and other models come in? Like, does that still matter?
The time is, in the world of startups, time is measured in money. You are out of time when you run out of money. And as long as you have money, you have all the time you want until that money runs out. That's true for startups and it's true for fund managers. It's true on both sides of the table. The only advantage that a new company or a new fund or new whatever has over the big established players is you can move fast because there's no historic inertia. There's no big decision-making system. Again, going back to my opening, at least on my steps of why I can't see how big companies make decisions, because they make decisions at such a slow pace with so many people involved that it's just flabbergasting to me that they ever actually do make a decision. Versus my teams, we meet on once a week. And in any given meeting once a week, we may decide to try something that's never been tried before or throw away something we've been working on for 6 months. We're free to make those decisions and then move on and do something else.
Brilliant. And we'll go to our next segment. It's called Decision Do-Over. So in this segment, we actually discuss moments in your path that could have gone differently now that you've had time to think about it. So are there any moments where you would want a decision do-over looking back?
Oh, sure, of course. But I did blog about one that I just, I do love what-if analysis. Like part of being an entrepreneur is, a successful entrepreneur, is thinking about plan B, plan C, plan D, plan E, because plan A never works. What most failed entrepreneurs do is they stick with plan A and they don't have a plan B. And I did blog about this in terms of fan fiction. One of my hobbies is to read Harry Potter fan fiction. There are 900,000 Harry Potter fan fiction stories published. Just let that settle in. There are, so if the total books, which are good, right? The total 7 books are maybe 4,000 pages. There is something on the order of 100,000 other pages of stories, right? Some of these fan fictions are the length of the whole book series. Some are 1 page. There are 900,000 variations. And the reason I like reading that particular subset of things, is that people keep coming up with ideas that no one else has come up with. It's just amazing that it's possible to have read literally 1,000 of these little stories, and yet you can find one that has yet another idea in the same, with the same characters in this same basic structure that has something new. I just find that to be eye-opening, and it shows me that it doesn't go plan A through plan Z. It goes plan A through plan 900,000. All right, so do-over. I was at my first company. We had made a breakthrough invention that the world knows as graffiti, like the Palm Pilot graffiti. Like we had that first. We had showed it to the guy who did graffiti, and that inspired him to actually get that in the market. And we had the opportunity to sell it to a spinoff of Apple. And we just didn't have the experience at the time on how to structure that. I remember being 20-something years old, having some sleepless nights at the time, trying to think of how do I structure this so that they'll buy it. And I couldn't come up with anything that they came and did. So ultimately, like that company failed in part because we couldn't solve that problem. 6 years later, literally 6 years later, I wake up at 2 a.m. and I go, oh, I got it. Like I was not doing company number 1 anymore. It had shut down. I wasn't even doing company number 2 anymore. It had gotten acquired. I was on company number 3. And I realized what I should have done 6 years earlier at company number 1. The whole idea of mentors and whatnot did not exist in the early 90s. There was no crowd of mentors to tap. There was a handful of, like we had hired someone who was a professional, like 60-year-old business guy. I had a few people I could turn to, but I did not have right now, if I needed to solve this problem, I would just put it in my Substack. It would get read by thousands of people and I would have an answer. And if for some reason they didn't have an answer, I could send it to the hundreds of mentors at Fledge and I could have an answer. But in this case, we didn't have that resource. We just had a handful of us. None of us figured it out. And literally 6 years later, I had the breakthrough, like literally waking up in the middle of the night. I don't even think I was thinking about it. It was just in the back of my head for years and years and years. It's fine. I did okay without that.
And was this like you were looking for the answer within you yourself, or this was even with your team of mentors and co-founders that you couldn't figure it out?
The stories of these companies have been, there's actually been movies made of the systems I was working on back in the 90s. Like those are the interesting stories. But literally there was a movie made, or at least a documentary made about General Magic.
Okay, next segment we'll go into is Vision Venture. So what do you want to share? What's pulling you right now? Like in which directions? And this could be Africa Eats, Africa Tree, anything.
Africa Eats is an investment company in Africa. It's succeeding wildly, despite the fact that almost no money is sent to Africa to do these kinds of investments. We invest in the food and ag sector. And the best stats I saw was posted earlier this year. In 2024, $100 million was invested in young food and ag companies in Africa across the entire continent. And for those who don't know, like the entire continent of Africa is bigger than the US, Western Europe, and China combined. And it has the population the same as China and India, 1.4 billion people. And it was $100 million, which is like a decent Series B for a tech company in San Francisco or Seattle. So it was just not enough money. And so we spent most of 2024 opening up the capital markets, as they call them, the stock exchange. So we actually listed Africa Eats and 2 of our investees on an African stock exchange in Mauritius. And so looking forward, and we did raise capital doing that. And so going forward, the big push is to see how deep can that go. So most of the world's liquid money is in public stock exchanges. How far can we bring these and other companies that we're listing in front of the investors that care about public stocks?
How are you thinking that through in terms of time frame and then like your next steps that you're looking through to unlock?
2030s. The time frame that we're seeing is that the goal is that by the time we get to the 2030s, significant amounts of money is flowing in that channel, not just to us, but every deserving SME in Africa that can follow this path, so that it's billions and billions of dollars flowing, not hundreds of millions.
And do the capital markets react the same way? Because at least I see it as there's a lot more value being created, which might not be just economics that you're focusing on. This is actually about poverty, hunger, and environment that you're engaging with.
Yeah. So we're impact investors. We've literally pulled 1 million people out of poverty and made our investors money. Like, you can do both. The only way we're going to pull the other billion Africans out of poverty, and that's roughly the scale of the issue, is by investing in companies that get them incomes, right? Whether that's job, or most of them are farmers, like literally just buying the food the farmers are growing. That's how we solve poverty in Africa Eats. So in order to do that, we, the world, needs billions of dollars of investment capital to flow in to make those companies, because they don't exist today. And so how are you going to get, and when I say billions, how are you going to get $50 billion to show up in the next 10 years, 20 years? Well, money generally follows returns. If we can make money for the early investors now, well, then we can hopefully make more money for the later investors as they come in, and get the flywheel going, the virtuous cycle going, so that it attracts more and more capital. And the story I usually tell around this is the other way. So I'm kind of telling it backwards tonight. If you look at China, it was a poor agrarian nation in 1985. And now it's the second biggest economy in the world. So nobody can deny that it is possible to pull over 1 billion people out of poverty. It's been done, already been done. It took 30 years. And if you look at India, well, in 1992, it was a poor agrarian nation with a teeny bit of industry. And now half of that 1.4 billion people are living middle-class lifestyles. So they're on their way. They'll get to the rest. It'll take them 10 more years. And so I expect that Africa will follow. I think it's inevitable that Africa will follow, and it's just a matter of when. And so the question is 2030s or 2040s or 2050s. When will the world wake up, open the business pages, and be reading about 500 million African middle class? I'm not going to predict which year that is or even which decade, but if we're successful at what we're doing now, we pull more money in sooner and we can get there sooner.
This actually sets up for our next segment. So we'll get into puzzle point. And in puzzle point, you get to go a little bit deeper on the harder parts of things that you're working on and how you're thinking that through. Your vision is a very big one, because you're thinking continent level, and you're, in terms of time frame, you're also talking decades ahead. Bringing it down to, again, first principles as we started this. What are the immediate puzzles that you're actually trying to unlock here?
Immediate, I am listing the 4th company on the stock exchange of Mauritius right now. We just finished the paperwork. We started the roadshow. I'm trying to raise them $3.3 million. If we raise that money, they get to be a publicly listed company, and then we'll move on to the next one, and then the next one, and the next one. So one at a time, 1 or 2 per year, just show that it can be done. There is no flywheel. There is no virtuous cycle yet. We just have the makings of it. So the near-term challenge is to get that flywheel moving. And I could say that it's barely moving at the moment and could easily just stop. But, give us a few more years. Yeah, we are looking out in long distance times here. But, give us 5 years, and all of a sudden we wake up, and all of a sudden we have a 5-year track record with public companies instead of just this long-term vision. And 5 years after that, we have a decade. We have a decade of track record of here's what it looks like when SMEs go public. Here's how much money they raise. Here's what happens to their growth and so forth. So that's getting that path to work is the near-term problem and the long-term problem.
And I have a question in the space that you're working in. You also made a comment around the models that was designed in places like Silicon Valley and San Francisco, the Bay Area, does not work for many cities, even in the US. Forget other countries, multiple countries, definitely not Africa. So I don't want to ask what are things in Africa that, the things that you're working on the model, but I want to ask the other one, which is, what are things in Africa that actually make it easier that you go we should be doing something or learning from here, what they're doing, which could be a simpler or just a more elegant solution? What have you seen?
Yeah, I think you're asking it wrong. Sorry. But so I actually wound up teaching MBA students at that business school for 8 more years after I mentored. So 9-year run at the school. Day 1 in my class, we would take out a marker on a whiteboard, and I said, don't come to class with any ideas of what companies you want to do. We'll work on that on day 1. And day 1, literally in 20 minutes, throw out ideas you have for businesses. Just toss them out brainstorm style. We'll just write them on the board. No comments, no critiques. Let's just fill the board. And literally in like 15 minutes, we could fill the board with business ideas. Okay, seems reasonable, right? None of them are good ideas. They were okay ideas, but most of them, the reason why most startups fail in the United States is because there's 350 million people. The business ecosystem's been functional for like 180 years. And there really aren't very many ideas that haven't been done before, and very few ideas of a new product or a new service that doesn't already exist in your neighborhood, let alone across the country. And that's not true in Africa. So my most successful company by revenues and the first investment I made, they make most of their money selling potatoes, onions, and bananas. So they are an aggregator of potatoes, onions, and bananas. They didn't start there. They started in a broader area and narrowed it down. And now they do some more products, but that's kind of their three big pieces. Well, you can't do that in the United States. There's already aggregators and distributors for potatoes, onions, and bananas. And bananas don't even grow in the United States. Yeah, you have to set up a supply chain down to Central America for that, which was set up by United Fruit and Dole and others back in the 1800s. So in the 1800s, that was a good idea. In the 2020s, that's a terrible idea. Selling bananas is not something you can do. But there are 55 countries in Africa. Okay, some of them don't have governments. Some of them have wars going on. So there are 45 decent countries you can go invest in right now. And I'll bet you that 44 of them don't have a big banana aggregator. Maybe I'm wrong. Maybe it's 43, maybe 42. Don't try and do this business in Tanzania. That's where my guy works. That's where my company works. You will get crushed because they're already ahead of you. And they built that in they only started doing bananas 3-4 years ago. That wasn't even in the plan at the beginning. He just noticed an opportunity. So one thing that Africa has going for it that most of the rest of the world doesn't is basically if you come up with a simple idea, it's probably not being done. Another quick example would be in Rwanda. Literally, I met the guy who was hand cranking sausages. What I learned about Rwanda subsequent to investing in a tiny little sausage company was it was one of the rare countries in the world where chicken costs more than beef. How could chicken cost more than beef? And the answer is nobody was growing chickens. Literally hundreds of people were growing chickens, no commercial chicken processors, no farmers with 1,000 chickens. And so he started growing chickens with farmers. And now he is, I believe, the largest chicken aggregator in the country of Rwanda. And that's new as of 2 years ago. Chicken wasn't a big thing until for him or the whole country 2 years ago. And so that opportunity is there. And the other thing that Africa has going for it, which everybody sees as a barrier and a detriment, is there's 55 countries. And that's a good thing, right? For what we do, that is awesome because it means that our company doing chickens in Rwanda or bananas in Tanzania is not competing with a company doing either of those in any of the other countries. There are literally physical barriers in the way. There is a cost of crossing those borders. So there's a free trade-ish zones, but it's not like Europe. You don't drive straight across the border. You got to sit there with your truck for hours to cross the border, which is an amazing barrier. It means that we can create the largest of whatever in one country with basically no worry of competition. And then once we have something that's of national scale or of millions of dollars of revenues scale, now we can cross the border and go and set up operations in the next country, and we get to pick which direction to go. So we pick the direction to the neighboring country that doesn't have the competitor. And now we have 2 countries. And we haven't gotten to 3 or 4 yet. We haven't been doing this long enough. But the expectation is that you give us 10 years and we will have multinational companies working in lots of countries and not even contiguous. Because at some point you just say, okay, it's time to go and tackle Nigeria, which, by the way, has 200 million people in it. Right? Or Ethiopia, which has 120 million people in it. Or the opposite, which is a West African company that says, okay, it's time to go tackle Kenya, which is only 50 million. But then from Kenya, you can do the East Africa and the 4 East African countries, which is 250 million. There are big chunks of audiences to get to once you have gotten your company up to scale.
That is actually fantastic. Bringing it again to what you started off with, going to the fundamentals and then making sure that it's working, and then you're taking it out, which again is a very fundamental business point, but you're living it and seeing how it's working.
Yeah, and just compare this to the AI app, whatever cloud startup in the States. You have to be national to start with. Like, you can't start a cloud company that only serves Phoenix, Arizona.
Yeah.
That doesn't make any sense. So you have to be national. And that wasn't true in the 90s. You could be regional in the 90s, but even if you're calling a food company, okay, you can start your little organic food product in one city, but then it's going to grow to be regional, and then it needs to get to be national, or whoever's doing that same product somewhere else in the country is going to eventually come to your neighborhood and potentially crush you.
Fantastic. You get into our last segment, and this is a fun segment called Game Break. I'll give you two choices, this or that, and then you get to pick one. And then if you want, you can explain why. So first one I'll throw you. Founder lens or investor lens?
Founder lens every time.
Local solutions or global frameworks?
Oof, it's a tough one, but global frameworks.
Cash flow or growth?
Growth.
5-year view or decades-long vision?
Yeah, you heard that one already. It's decades-long vision.
Yeah. This was set up before.
Yeah, I got it.
Books or field visits?
Well, it's a tough choice. No, that's not as obvious as so my fellow faculty used to make fun of me for writing books because I've written a lot of books. But I have also shot a significant number of videos during field visits. And I've even taught people how to do that. So in this case, I'm going to pick field visits.
Luni, thanks for talking us through your work, what you're doing, and the vision and work you're having for a continent scale, and thinking through systems scale, real impact all together. Thank you for being on the podcast and sharing all of that.
Yeah, thank you for having me.
So where can people follow your writing, learn about Africa Eats, or even get connected with the work you're doing in these different ventures?
All right, here's a long list. So africaeats.com is the website for the company. If you want to see those site visits, like give up a night of Netflix and just go visit factories in Africa, YouTube Africa Eats channel. It's like YouTube/@AfricaEats. Mm-hmm. My personal blog is lunarmobiscuit.com, which I'm not going to spell. Just ask Google for Luni and something. It'll show up. Luni. And then I've been blogging for the last year on a Substack that's called What If Only. And it's literally just one word, whatifOnly.substack.com.
Brilliant. Thank you for joining us today. And for everyone listening, we'll be back with more conversations that explore people behind the work, stories and wisdom.
Yeah, thanks for having me.
Playfulness and curiosity.
This new superpower called persuasion.
They're the rules of the world, and then here's the rules for us.
Real deep pain.
That was a very different level of inequity.
What does rich mean?
Stories and wisdom, we rise, we fall.